Len Martinez, PhD CPA, is president of Bull Valley Advisors. Len publishes the Bull Valley Advisor, a stock market newsletter for institutional investors, featuring his BVA Value Momentum portfolio strategy. Podcast, anchor.fm/Len-Martinez-PhD-CPA. Institutional investors visit my website to subscribe and ask for a free copy of the Bull Valley Advisor monthly email newsletter, www.bullvalleyadvisors.com. Investing in value stocks with positive price momentum. May 31, 2021 BVA Value Momentum Portfolio Performance. May 31, 2021. Year-to-date, the BVA Value Momentum Portfolio Strategy return is up 56.67% compared to a gain of 11.32% for the Morningstar U.S. Market Index. Since the start of the portfolio on January 2, 2019, the BVA Value Momentum Portfolio Strategy return is up 260.61% compared to an increase of 25.6% for the Morningstar U.S. Market Index. In May 2021, the portfolio was moved to a 100% cash position. Thank you, and please stay tuned for more upcoming reports. Len Martinez, PhD CPA, is president of Bull Valley Advisors. Len publishes the Bull Valley Advisor, a stock market newsletter for institutional investors, featuring his BVA Value Momentum portfolio strategy. Information in this report and the Bull Valley Advisor newsletter should not be considered as investment advice or an offer to buy or sell securities. Data is derived from sources considered to be reliable, including Morningstar, StockCharts.com, Yahoo Finance, Finviz, TipRanks, Investing.com, ECRI, OECD, Guru Focus, Crestmont Research, Trading Economics, IBD, and S2O. Results are not guaranteed. Len Martinez is not an RIA. The data is shown for informational purposes and should not be considered investment advice or an offer to buy or sell securities. Institutional investors, be sure to visit my website to subscribe and ask for a free copy of the Bull Valley Advisor stock market newsletter. www.bullvalleyadvisors.com. Click on the below YouTube channel link to visit my channel and view all of my commentaries. Also, take a look at my playlists to see topics I am currently watching. Like and subscribe to the channel to stay up to date on the latest commentary. Len Martinez, PhD CPA YouTube channel link. Investing in value stocks with positive price momentum.
Hello everyone, today is Friday, May 28th, 2021. My name is Evan. Welcome back to our weekly stock market analysis video. If this is your first time joining us, welcome. Thanks for tuning in. Here's how these videos work. We break our analysis up into two parts. In part one, we look at everything that went on this week in markets. We look at performance and correlations, volatility, market internals, credit markets, interest rates, all of the good stuff, and pick apart everything that stands out and looks interesting. And then in part two of this video, we jump into the charts. We put everything into context from part one, and we try and best position ourselves looking ahead. So hopefully that sounds good to you. Let's jump into some of the headlines from this week. First, we have markets closed on Monday for Memorial Day, and thank you everyone who served in the military. Markets will be closed on Monday. Stocks for this past week have really just surged or kind of accelerated their move up. Most of the indices aren't closing back at all-time highs, but they're getting close, and they've got their sights set on it. We're going to talk a little bit more about that in part two. And we've got the VIX retreating all the way back to pretty much multi-month lows. I don't know what the exact figure is. Again, we'll look at that in part two, but it's around 16, and that's quite the deflation out of the balloon from, 30 plus just a couple of weeks ago. So those were some of the big takeaways. Let's look at some of the numbers here. If we look at the right-hand column, this is the 1 week change numbers. So you can see everything was firmly in the green this week. The Dow Jones was lagging on a relative basis, and the NASDAQ and Russell were really the outperformers here, both up over 2%. Notice this 1 month column here. So it's just the NASDAQ now over the past 1 month is still in negative territory. So it's still playing a little bit of catch up, because remember, we had a lot of sort of growth being left for dead again, and the value trade starting to work again. Well, now we're starting to see that heat up in terms of the battle of performance between growth and value. So we're going to keep an eye on that. We're going to talk more about that a little bit later in this video as well. If we look at market internals, here is a very strong week under the market hood. If we look at the top row, we've got NYSE 52-week highs minus lows. Take a look at these numbers here on the week. 788 new 52-week highs made. That's a very strong number. That's a healthy number. That's exactly what we want to see this market do if we are bullish. Second row here is the cumulative AD line, almost 3,000 on the week. Again, a nice healthy number there. And if we look at the percentage of stocks over 20 SMA in the S&P 500, we're sitting around 65%, which is still, room to go to the upside here. We're not totally overbought, stretched, and sort of to the moon in lots of these markets. So there is potentially some more room to that upside. Here is the 52-week highs minus lows graphed. And last week, we started to talk about it. So we were kind of in this zone right in here, if you look at where my cursor is. And we were saying how, the number of highs here are starting to flatten out a little bit. And we wanted to just pay attention to see how that flattening procedure sort of developed, and we sort of got our answer this week. It resolved to the upside. It was a bit of a continuation pattern, so to speak, in the number of stocks hitting 52-week highs. We flatlined for a little bit, maybe got some people worried here, maybe this is the tipping point, but now the bulls are kind of bringing us back here, supporting this market and breaking stocks out to new highs. So that is constructive. That's exactly what you want to see, and we love to monitor this chart in particular. If we look at sector performance here, we have the majority of sectors in the green here, and quite frankly, it's all the sectors you want to see. So we did have, let's start from the bottom. If we're looking at this right row here, we had 3 sectors in the red. It was consumer staples, healthcare, and utilities. Traditionally, those are the exact sectors you would want to see sort of underperform in your perfect, quote unquote, risk market environment. So the fact that we had consumer discretionary up here, communication services, real estate, I don't know if that's traditionally seen as super exciting in terms of a risk asset, but certainly industrials, technology, financials, these are all things that you want to see kind of outperforming, outpacing some of the more defensive areas of the market. And you did get that basically checks across the board. If we look at correlations here, we see another one of our old favorites starting to develop, and this is a narrative and a discussion that is very much in the front of lots of people's minds, 2021, and it is interest rates and what bonds are doing. So there's a couple of ways to visualize this. If you look at where my cursor is here, the percent TNX, that is the 10-year yield. And so what you're seeing here with these strongly negative inverse correlations to equity markets. So you're basically seeing the interest rates moving in the exact opposite direction. So interest rates up, we're seeing stocks down, interest rates down, stocks up. You can also visualize this on the TLT. So if you look at my cursor here, you can see TLT. Take a look at the first 3 numbers here, particularly the NASDAQ. If we're looking at the long bond, take a look at its very, very strong 0.93 correlation to NDX right now. So that's telling you that, as TLT finds support, starts to rally a little bit, that's helping, potentially ease off of the technology sort of space. And that makes sense if you're doing sort of, the discounted cash flows into the future and you're thinking about what rates are on a long-term basis. It's exactly what you'd want to see. So those are the 2 things that are sort of standing out there. I'd say lower interest rates will continue to be a good thing for specifically technology. And if we do want to think about technology coming back into the rotation spotlight for leadership, you'd want to see interest rates continue to fall. That's sort of my takeaway at this, and so far so good. This week certainly proved it. We'll see what next week brings into the new month. If we look at volatility here, volatility falling quite sharply here across the curve. Take a look at the VIX here. So it looks like, yeah, about 16.6 is the final figure I pulled on this particular graph. And you can see that is well below the 20.15 close that we had last week. We still see a pretty steep front month to 3 month curve here, so that is interesting that we're still seeing such steepness, but it is something where, you know, we are kind of in the proper sort of direction or structure for this. And I'd say, you know, while we sit in the teens, that's a good thing for this market to be below 20 and into these teens. If we look at interest rates and credit here, we saw yields falling across the board. So bond prices rallying, yields falling, credit markets here, investment grade bonds not doing a whole lot there, and just kind of normal and expected sort of behavior. If we look at dollar and commodities, it's a very flat week for the dollar. The dollar's been getting pummeled. So the fact that it was flat, we talked about sort of the location of where the dollar is. It's essentially back to year-to-date lows. There's some support there. We sort of expected a bounce. We kind of got the bounce, but it's been weak so far. We're in an overall downtrend, so I'm not so excited on the dollar on a longer term perspective, but we could certainly bounce a little bit in the short term. We saw gold, silver, Bitcoin, ag, crude oil, natural gas. Everything here was green this week. So everything on the commodity side was enjoying this week, this environment. If we look at the report card, we got check marks across the board. Doesn't happen all that often, but we got green checks there across all of the factors here that we're looking at. Gives us a solid A in terms of the report card for this week. If we finalize things with